Good morning, dear subscribers. Today is 21st of February. The future trend analysis is again with you. This day we'd like to mention the fact of continuous stabilization of the dollar price. As you can see, the dollar is 1.6% above the lows reached on Friday. I mean on the trade weighted basis against the basket of 6 major peers. The market attention today will be concentrated around the Fed's meeting minutes, which, as the market expected, should be more or less hawkish, and also this fact should further support the dollar at the moment. But of course, the result we'll see some later, and the reaction of the market will be quite important. Also, we'd like to mention that the dollar is now at the kind of very interesting position because it's not far. It's approached, let's say so, it's approached some rather important technical barriers against some of majors. So we'd like to pay your attention to the both of technical or fundamental situation regarding the United States dollar, and today is quite important day because it could determine the nearest future of the dollar. If the dollar will turn around against their pivotal technical levels, or the Fed's meeting minutes won't be so hawkish as the market expected, probably the dollar will return to its underlying bearish trends. But of course, the time will show how the market will react to the incoming information. But now we'd like to present you our renewed kind of analysis. You can see that we increased our position in the euro dollar at 23.20. Now an average is 23.90. The stop is below the lows of 14th of February at 122.75. Also here at 123 you can see the accelerated uptrend. So we'd like to put our stop loss both below this accelerated uptrend and below the moving average for our line, which lies at the moment at 122.90. We suggest that probably the market will find a base around local levels and make a kind of rebound. But probably the more important moves we see only after the publication of the Fed's meeting minutes. In case of dipping and closing below this level of 22.75, the next barrier of course will be around 122, where are the lows of February around 22.05, with another point which is more important is longer term uptrend line, which lies around 120.35. You can see this uptrend line was drawn from the lows of November 2017 below 116. If you remember, the low was around 115.5. So this kind of level should represent a kind of interesting level to reach if the correction in the euro dollar extends further. Of course, there are a lot of talkings among the traders about the so-called double or triple top formation on the technical charts in the euro dollar. But we are not so optimistic regarding this. We are not so optimistic like, for example, some major European banks and strategy of these banks to sell the euro dollar right now and to expect it to below 121. But of course, everything could happen Anyway, our main idea that the dollar should stick to its underlying bearish trend, and sooner or later the euro dollar should rebound. Anyway, we have also to remind you about the political factors in the eurozone, and these political factors of course should dampen the current bullishness of the euro pairs. Among such kind of political factors are, for example, the Italian election, which scheduled to take place on, as I remember, on March 4th. Also, don't forget about the current collecting of the votes of SPD party in Germany regarding the future coalition of the Angela Merkel conservatives with the SPD and future German possible of the future German government. All of these political factors, of course, should dampen the current bullishness of the euro-dollar price. But anyway, let's wait a little and to see how the situation evolves further. The dollar yen, we sold the dollar yen at 107.90 as promised yesterday in our report, with a very close stop loss about 108.05. Anyway, in case of further rising of this pair, we are ready to sell it against this kind of short-term downtrend at 108.60. The cable, which is at one fluctuating around the psychologically important 140 barrier, should also sooner or later extend its current bullish trend. But of course, to be more promising in its potential, upside potential, the pair should break above short-term downtrend at 141.05. The dollar Swiss, as we promised also, we sold this pair this morning at 93.70 with a close stop above 94.10. We still suggest that the underlying trend here is for sure to the south. Anyway, a break above 94.10 or more important 94.70 should bring more respite for the dollar Swiss bulls in its attempts to chase the currency higher from here. The Australian dollar, we closed the position yesterday below 78.90, but now we still expect the pair could reach its short-term uptrend, but anyway we will use this kind of drop to 78 to rebuy the currency, because here the pair should look north while trading above a moving average 200 daily line, which intersects today around 0.7772. Like in New Zealand dollar, we still suggest that the pair is reasonable to buy the pair at 72.80 with a stop below this uptrend of 72.50. The dollar Canada, we also sold this pair at 26.40, probably a little bit premature, but anyway, while the pair is trading below its moving average 200 daily line, which lies today at 27.15, we still expect the pair continues its underlying bearish trend. So that's why we put our stop loss above 27.15 this morning. In the euro yen, like in the euro Swiss and in the euro sterling, the situation is still the same. This kind of pair is still trading in the range, and we prefer to be flexible regarding trading these pairs, ready to buy the dips or selling the rallies. Probably the euro sterling is more interesting at the moment, because yesterday this pair dropped to around 88.10. But anyway, while trading longer term above current lows of 86.85, the pair should be with neutral. Anyway, this morning the pay is trading below its moving average 200 daily line, of which intersects at 88.76, and probably here it's better to sell the pair on any kind of rallies. And finally, the euro ruble, which is 68.81 at the moment. We still long in the euro ruble and still expect the pair could reach its pivotal uptrend, which lies today around 69.10. We still advise you to buy this possible drop around 69.20, or to increase your long positions, because while trading above 68.90, the pair still could resume its underlying bullish trend. At the moment, that's all. We wish you a nice day ahead, and hope that tomorrow in the morning you will be again with us with FutureTrend. See you later, and bye bye for now.